Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it would seem that the market overnight failed to sustain its rally for the start of the week and now crushes the support which was holding at $16.30. In light of the reversal and also taking out the recent low of last week of 36, now questions whether the silver can recover in the next 24 hours. In light of the pattern, the next support I see is at $15.95. Now, failing to hold there would give further implications to the downside and bring in a target of $15.70. To reverse this picture, the market would now need to break above $16.35. Currently trading at $16.80, a break above 35 would reinstate the upside and give a target of $16.55 and reassess from there. The bullish risk appetite reduces further overnight for gold as the market takes out the 1238 support and went straight for the bull camp at 1231 to 33. Crushing that level, the market is now exposed to the level of 1215. It is viewed from there the market should recover with minor support seen at 1220. However, failing to get a recovery from that 1215 level does give further concerns and we could see a move towards 1190. But this view is unlikely due to the fact that we are oversold, and I do expect to see support hold from 1215 and eventually look back up towards 1226, with the next resistance that needs to be cleared is 1230 to 33, which is where the bull camp was situated. And if we do get a break above there, then a further recovery would see towards 1240. The Australian dollar weakened in Asia after a better than expected Cajun PMI reading from China. The Chinese manufacturing PMI for June beat expectations, offering hope that the world's second largest economy continues to defy expectations for a slowdown. Later today we have the retail sales, and then followed by that we have the RBA monetary policy meeting, followed by the rate statement. It is unlikely that the market will view any change from the RBA's historical lows of 1.5%. However, the wild card still remains to the statement. After last week, former RBA board member John Edwards did comment on the future course of the central bank's monetary policy and hinted that there could be at least 8.25 percentage points of hikes towards a period of 2018 to 2019. So do keep an eye out for the statement at 2:30 today, and also of course with the retail sales. I do expect to see the market now with the support taken out at 76.50 to look towards 15.25, and a break beneath there would give further exposure to the downside, with any advances seen a cap around 75 as minor. However, a break above there still expects to see fresh supply and also a very strong response from the bears if we challenge 77.0540. Well, the euro has remained weaker, as you can see here. The market now backing off from the 114.0520 resistance and now looking towards 113.25. Now it is viewed that with the break overnight of the support that came in at 113.65 should give downside implications now towards 112.90.95 or lower towards 112.20.25. However, we still need to keep an eye on the US dollar, and if it does continue to gain for further recovery from last week's 40-week low of 95.22 on the index, then we could see the euro break further and look towards its trend line, which comes in around 112.20.25. Well, dollar yen surprisingly rallies on and takes out the resistance of 112.60 and looks now towards 113.60. A little bit of cautious of the bull move here. The fact is that we are still overbought. However, we would need to see a move through 112.80 to get the next move down, which comes in at 111.80.10 as probably a bull camp situated from there. The longer we remain above 112.80 though, would eventually see the consolidation take out the top side, eventually to move towards 114.30.35 and reassess from there. To wrap up with sterling, the market is now slipping lower after the recent advances was rallying on light volume. It is viewed now that a break beneath 129.10 would give further exposure to the downside and look towards a target of 128.60 and maybe lower towards 127.70.85 and reassess from there. As I mentioned, any advances towards the top side, I still expect to see the bears defend the regions of either 129.85 or firmer above at 130.45. So that wraps up my daily webinar. Thank you very much for joining me, and I hope you have a wonderful day ahead.